Ethereum is slamming into a major resistance wall, around 3,400, while XRP and XLM are trying to claw back relevance just as a new PayFi payments narrative and institutional crypto products steal the spotlight. At the same time, behind the scenes, wash trading and thin liquidity are still quietly inflating valuations across the market. Welcome back to BlockNexus TV. Today's episode has it all. Ethereum at a make-or-break level, XRP and XLM staging a comeback, Wall Street moving deeper into crypto, and a brutal truth about fake volume and inflated valuations. Before anyone hits buy, it is worth unpacking what is real demand, what is just clever marketing on a chart, and where the next serious narrative is actually forming. Ethereum has just ripped into a heavy high time frame resistance zone around 3,400, where a bearish order block, the value area high, and the 0.618 Fibonacci retracement all stack together. This is exactly the kind of area where larger players historically unload into strength, while retail chases green candles.
If ETH can reclaim and close above 3,400 with real volume and sustained acceptance, the structure favors continuation toward higher resistance levels, but failure to hold above that zone turns this move into a likely fake-out, with rotation back down toward the lower value area. As the market rotates into 2026, XRP and XLM have both reclaimed short-term support and resistance levels, with trading volume picking up as traders hunt for comeback plays. XRP recently pushed through an intermediate resistance with a sharp jump in volume, while XLM buyers are defending demand zones inside a descending channel. But the more interesting shift is narrative-driven. Capital is quietly rotating toward payment-focused infrastructure, with projects like the Ethereum-based PayFi platform Remitix gaining attention for live wallets, upcoming crypto-to-bank transfers across 30-plus countries, and a launch of its full PayFi platform scheduled for February 9, 2026. With over $28.8 million raised and more than 701 million tokens sold at around 0.123 per token, interest is starting to follow real-world payment rails rather than pure chart rebounds. On the institutional side, Morgan Stanley has filed multiple S1s with the SEC for its own spot Bitcoin, Solana, and Ethereum trusts, including an Ethereum product that bakes in staking rewards, marking one of the first times a major Wall Street bank moves to issue its own spot crypto ETFs instead of just routing clients into third-party funds. Parallel to this, structured participation models like Sol staking are pitching fixed-term contract-based exposure with USD-denominated contracts and settlements in assets like Sol, XRP, BTC, ETH, and USDT, advertising examples such as a 2-day $100 trial contract targeting $108 or a 30-day $30,000 XRP plan targeting $44,400. These models emphasize asset segregation, ensured custody, and automated execution, positioning themselves as a predictable, rules-based alternative to pure price speculation. The dark side, fake volume and fragile valuations. Underneath all this innovation, crypto pricing still has a structural problem. Thin liquidity, widespread wash trading, and insider coordination can manufacture volume and make charts look like product-market fit, even when real usage is minimal. In one highlighted case, insiders around the OM token allegedly wash-traded it into the top 25 by market cap on paper, while less than 1% of supply was genuinely traded before the price collapsed 90% in about 90 minutes as insiders exited. Unlike equities, most tokens lack fundamentals like earnings or cash flow, so price becomes the default signal, which makes it easy for manipulative buying to kick off momentum flywheels that drag in new investors, distort developer behavior, and ultimately erode trust, just when regulators, banks, and Wall Street are paying the most attention. For crypto to become credible infrastructure instead of a hype machine, the market needs deeper, honest liquidity, stronger safeguards, and investors willing to question every spike before celebrating it.